Barings Bank is one of the oldest and prominent financial institutions in world history. It was founded in 1762 in the United Kingdom by John Baring and operated for over 233 years. Barings Bank became a significant source of finance for the commercial activities of the British Empire during its expansion in India, Asia, and America. Throughout the 19th century, the bank gained a worldwide reputation by contributing to the financing of the British government's debts. Barings Bank also stood out with its innovative approach in the global financial markets. For example, the bank conducted a bond issue for the American government in 1802 and became a pioneer of modern investment banking by managing this issuance in a consolidated manner. Barings Bank also established an international network to meet the needs of global investors and owned Eagle Star Assurance Company, one of the largest insurance companies in the UK. However, in 1995, Barings Bank was shaken by one of the biggest banking scandals in history. Nick Leeson, a branch manager in Singapore, caused the bank to lose $1.4 billion by illegally using its resources, leading to the collapse of the bank. This event marked the end of Barings Bank's history and created a shockwave in the financial world. Today, Barings Asset Management, the successor of Barings Bank, operates as a global asset management company. The history and significance of Barings Bank continue to maintain their place in financial history. What lessons did the Barings Bank scandal teach in the financial sector? What prior experiences did Nick Leeson have before joining Barings Bank, and how did he utilize those experiences in the outbreak of the scandal? The Barings Bank scandal emphasized the importance of financial regulatory reforms. What impact did these reforms have on the financial sector? For all this and more, before starting the video, if you're interested in universal economic history, you can subscribe to my channel and turn on notifications to be informed about new videos I upload every day. Enjoy the watch.
Universal economic history.
Nick Leeson was born on March 25, 1967, in Watford, England. After high school, Leeson started his career in banking and began working at Coutts & Company in 1985. He later transitioned to Morgan Stanley, an investment bank, in 1989. In 1992, at the age of 25, Leeson joined Barings Bank and worked in the futures trading division in Singapore. Leeson quickly gained attention as a successful trader and was promoted to the position of Assistant General Manager of Barings Operations in Singapore in 1994. Leeson's role was to monitor and trade futures contracts on the Singapore Exchange and increase the bank's profits. However, while managing high-risk trades, Leeson made a series of errors and conducted fraudulent transactions in the bank's accounts to conceal the losses. When Leeson joined Barings Bank in Singapore in 1992, he was responsible for trading in the futures markets. In his role in Singapore, Leeson aimed to increase the bank's profits by engaging in speculative futures trades. To mitigate risks in futures trading, Leeson created two accounts. The first account, referred to as the 88,888 account, was the bank's official account where legitimate trades were executed. The second account was named the 55,900 account and was used to hide losses. While conducting actual trades in the 88,888 account, Leeson created fictitious trades in the 55,900 account to conceal the losses. This method went unnoticed by the bank's auditors, and Leeson continued to trade, attempting to cover his losses by engaging in riskier trades. Leeson took a significant risk by venturing into the futures market from the Tokyo Stock Exchange to speculate. However, these trades proved unsuccessful due to events such as the Kobe earthquake and the Bank of Japan raising interest rates, resulting in substantial losses. While working on futures trades in his role in Singapore, Nick Leeson created massive losses and hidden accounts. The 88,888 account served as the official bank account where legitimate trades were conducted. However, The 55,900 account was a hidden account used to conceal losses by creating fictitious trades and generating false profits to hide the losses. Leeson withdrew large amounts of money from the 55,900 account to engage in high-risk trades. However, the creation of fictitious trades to hide the losses resulted in a positive balance in the account. These fraudulent transactions went unnoticed by the bank's regulators, and Leeson continued to trade while concealing his losses. Leeson later decided to take even riskier trades by investing in the Tokyo Stock Exchange. However, these trades failed due to events like the Kobe earthquake and the Bank of Japan raising interest rates, resulting in significant losses. To recover the losses, Leeson decided to take more risky trades, which ultimately increased the size of the losses. With a total of $1.4 billion in losses uncovered, Barings Bank filed for bankruptcy, becoming one of the biggest banking scandals in history. After the collapse of Barings Bank, Nick Leeson fled to Indonesia but was later arrested and tried in Singapore. Leeson was sentenced to prison and served time until his release in 2005. The massive losses created by Nick Leeson in his hidden accounts and loss-making trades led to the bankruptcy of Barings Bank. In 1995, the disclosed losses of the bank amounted to $827 million, marking one of the largest banking bankruptcies in history. The cause of the bankruptcy was Barings Bank's inadequate control over Nick Leeson's trades. Through manipulative techniques like creating fictitious trades to hide losses, Leeson managed to conceal his activities. Additionally, the bank's senior executives were unaware of Leeson's trades, contributing to their inability to detect the situation in advance. Shortly before the bankruptcy of Barings Bank, Nick Leeson escaped from Singapore in February 1995. He traveled to Hong Kong and then attempted to flee to Europe instead of surrendering himself. However, he was apprehended in a hotel in Germany and extradited to the United Kingdom. Nick Leeson was found guilty in his trial in the UK and sentenced to 6.5 years in prison. He served his prison sentence in a Singaporean jail. During Leeson's trial, his illegal activities related to Barings Bank's loss-making trades were revealed. Leeson created fictitious trades, manipulated the bank's computer systems, and made false statements to conceal his transactions. The trial also revealed that the bank's senior executives were complicit in the insufficient control and supervision that allowed these events to occur. This highlighted the need to strengthen risk management and control processes in the banking sector. The Barings Bank scandal caused significant reverberations in the global banking sector and resulted in several consequences. Here are some of the outcomes. Bankruptcy of Barings Bank. The scandal led to the bankruptcy of Barings Bank, one of the world's oldest banks, causing a major shockwave in the financial sector. The bank's collapse resulted in losses for many investors and customers. Strengthening of management and control processes. The scandal revealed the need for banks to review their management and control processes. Banks should provide more transparency about their transactions, closely monitor and control risks. Regulatory reforms in the banking sector. Following the scandal, regulatory authorities initiated reforms in the banking sector. Some countries implemented tighter regulations on the financial sector and emphasized the need for stricter oversight of banks' risk management and control processes. The Barings Bank scandal provided several lessons and precautions to be taken in the financial sector. Here are some of them. Risk management. The scandal emphasized the importance of effective risk management in the financial sector. Banks should strengthen their risk management processes and controls to align with investors' risk perceptions. Audit and control mechanisms. The scandal prompted banks to reassess their audit and control mechanisms. Banks should ensure greater transparency about their transactions, closely monitor and control risks. Personnel training. Training and raising awareness among employees in the financial sector can contribute to reliable operations of financial institutions. Banks should provide their employees with training on risk management and ethics. In conclusion, the Barings Bank scandal provided several lessons and precautions to be taken. Banks should prioritize risk management and strengthen their control processes. Additionally, financial institutions should provide training to employees on risk management and ethical conduct. Regulatory authorities should also implement stricter regulations to maintain financial stability. Thank you for watching my video. If you liked it, please hit the like button. If there's a specific video you'd like me to make on economic history, don't forget to mention it in the comments section. I wish everyone a pleasant day.
Universal economic history.